The International Monetary Fund, IMF, is recommending the introduction of a progressive personal income tax among measures to help the government shore up revenue and contain expenditures. In a report on the IMF's Executive Board Article 4 consultation done on March 15th, the fund recommended containing current expenditures, notably the wage bill, which it said will help create space for sustainable investment. The IMF called for reducing dependence on CBI revenue, which would require an overhaul of the taxation framework, including reducing tax expenditures, streamlining VAT, reforming property taxes, and introducing a progressive personal income tax. However, the IMF Executive Board directors took note of the government's stance to phase out electricity price subsidies and other crisis-era support measures. Containing current expenditures, notably the wage bill, will help create space for sustainable investment, the IMF said in its report. Meanwhile, the International Monetary Fund spoke in positive terms of the country's economy. St. Kitts and Nevis' economic growth rebounded strongly in 2022, despite global headwinds, the IMF said. GDP is estimated to have grown by 9% in 2022 after contracting to 14.5% in 2020 and 0.9% in 2021. The lifting of all COVID-related travel restrictions in August 2022 sparked a strong rebound in the tourism sector and across the economy. The IMF noted the authority's proactive policy response, facilitated by the fiscal buffers accumulated from a decade of prudent fiscal policy, helped shelter domestic prices from high global energy and food prices. These measures nonetheless took a heavy toll on fiscal accounts in 2022. The primary balance ex-CBI revenue and land buybacks, an indicator of the underlying fiscal stance, deteriorated to a deficit of 17% of GDP versus 15% in 2021. Large CBI inflows in 2022 helped finance this expansion, keeping public debt below the ECCU regional target of 60% of GDP. Return to pre-pandemic activity level is expected by the end of 2024, the IMF predicted, and beyond that, growth should converge toward its medium-term path. The budget is expected to be broadly balanced through 2025 and then go into deficits predicated on current policies. To read a summary of the latest report from the IMF, visit www.sknewsline.com or www.sknis.kn. I'm Andre Huey for SKN Newsline.